Everyone wants in. It's the most anticipated financial event of the decade, a ticket to the stars, a chance to own a piece of the future. But while the world waits for the SpaceX IPO, there's a secret meeting happening behind closed doors. And you weren't invited. Meet the pre-IPO investors, the venture capitalists, the insiders. They've already made their billions. And by the time this ticket reaches your hand, the game might already be over. Most people think an IPO is the beginning of a wealth journey. In reality, for the insiders, it's the exit. Today we're going behind the scenes of the SpaceX valuation. We're running the real math on Starlink's revenue, and we're revealing why buying the SpaceX hype might be the biggest mistake of your financial life. To understand the trap, you have to understand the price. As of 2026, SpaceX is valued at well over $1 trillion. That makes it more valuable than many of the world's largest industrial and media companies combined. But here's the problem. Boeing actually builds and sells thousands of planes. SpaceX? They build rockets that they mostly use for themselves. This is Starlink. It's the engine of the SpaceX IPO. But is it a profitable business or a massive cash-burning machine? Let's look at the math. Starlink needs 40 million subscribers just to break even on its satellite launches. Right now, they have less than 5 million. Every time a rocket goes up, Elon is burning your future potential profit. Think about the sheer scale of the operation. Each launch costs millions. Each satellite has a limited lifespan. To maintain the constellation, SpaceX has to keep launching over and over again. It's a treadmill of capital expenditure. If the subscriber growth stalls, the whole house of cards could come crashing down. And in a 2026 economy where every dollar is scrutinized, can Starlink really justify a $1 trillion+ valuation? The math says it's a stretch, a big one. Now let's talk about the pre-IPO ladder. This is where the real money is made. These investors, the big venture capital firms and the early employees, bought SpaceX when it was just a dream. They bought in at valuations of 1 billion, 10 billion, even 50 billion. They've waited years, sometimes decades, for this moment. When the IPO finally happens, they aren't looking to buy more shares. They are looking for liquidity. They want to turn those paper billions into real cash. And who provides that cash? You do. When you buy shares on the day of the IPO, you are effectively buying at the peak of the hype cycle. You are paying for the 20 years of growth that has already happened. If the stock price drops 20% or 30% in the months following the IPO, a common occurrence for high-profile tech stocks, you are the one holding the bag. Meanwhile, the early investors have already cashed out and are sipping cocktails on a beach in the Maldives. They made their 50,000% profit. You just bought a very expensive piece of paper. There's also a mystery brewing in the halls of the SEC. Elon Musk has hinted that he might not IPO SpaceX as a whole. Instead, he might only spin off Starlink. Think about the implications of that. Starlink is the cash cow. It's the part of the business that has a clear path to profitability. Starship, the massive rocket designed to go to Mars, could require enormous long-term investment with no guaranteed financial return. If Elon keeps the Mars part private and sells you the internet part, he's essentially asking you to fund his hobby while he keeps the real assets. It's a brilliant move for him, but is it a good move for you? We also have to consider the 2026 reality check. The era of easy money is over. In 2021, you could throw a dart at a tech stock and make 20%. But in 2026, with higher interest rates and a more cautious market, investors want one thing: earnings. They want to see real profit, not just potential. Because SpaceX is a private company, their financials are a black box. We don't know their real debt levels. We don't know their real operating margins. Buying the IPO is like buying a house without an inspection, while the seller is the most unpredictable man on the planet. Elon Musk is a genius, no doubt, but he's also a master of the hype cycle. He knows how to get people excited. He knows how to move markets with a single tweet. But as an investor, you can't live on hype. You need data. You need math. And the math on $1 trillion plus valuation for a company that still requires enormous ongoing investment is enough to make any investor pay attention. So what's the smarter move? The Wealth IQ strategy isn't about finding the next moonshot. It's about not being the exit liquidity for billionaires. It's about building a foundation of wealth that doesn't depend on the whims of a single CEO. If you really want to invest in the future of space, don't buy the hype. Look at the companies that provide the components. Look at the infrastructure. Look at the businesses that are actually profitable today. The American dream isn't about getting lucky with one stock. It's about understanding the system. It's about knowing when you're being sold a dream and when you're being offered a real opportunity. Don't let the shiny rockets distract you from the red ink on the balance sheet. Don't buy the trap. Build the wealth. Subscribe to the Wealth IQ and we'll keep showing you the numbers they don't want you to see. We'll keep digging into the stories that the mainstream media ignores. Because your financial future is too important to leave to chance. Let's dive deeper into the Starlink numbers. To hit that 40 million subscriber goal, Starlink needs to capture a massive portion of the global rural internet market. But they are facing increasing competition from local providers and other satellite constellations. And then there's the technical challenge. Maintaining thousands of satellites in low Earth orbit is an engineering nightmare. One solar flare, one collision, and billions of dollars in assets could vanish in an instant. Is that a risk you're willing to take with your retirement savings? And what about Elon's other distractions? Between Tesla, X, and his various other ventures, how much time is he actually spending on SpaceX? A company of this size and complexity needs a focused leader. If he's constantly putting out fires elsewhere, the SpaceX IPO could be a disaster waiting to happen. We've seen what happens when he loses focus. We've seen the volatility. Do you really want that in your portfolio? The bottom line is this. The SpaceX IPO will be a spectacle. It will be all over the news. Your friends will be talking about it. Your co-workers will be buying in. But remember, Marcus, remember the people who bought the hype and lost everything. The smartest investors are the ones who stay calm when everyone else is panicking, or in this case, when everyone else is celebrating. They are the ones who look at the math, not the headlines. At the Wealth IQ, we believe in transparency. We believe in education, and we believe that anyone can build lasting wealth if they have the right information. That's why we spend hundreds of hours researching these topics. That's why we break down the most complex financial concepts into simple, animated stories. Because we want you to succeed. We want you to be the one on the beach, not the one holding the bag. So before you click buy on that SpaceX IPO, ask yourself, am I buying a piece of the future, or am I just helping a billionaire buy another island? Let's look at the historical context of big tech IPOs. Think back to the early 2000s, or even the more recent debuts of companies like Uber or Airbnb. There's always a massive surge of excitement on day one. The media calls it a pop. But if you look at the chart 6 months later, many of those companies are trading well below their initial offering price. Why? Because the initial price was driven by emotion, not fundamentals. The SpaceX IPO is the ultimate emotional play. It's about humanity's future in the stars. It's about a charismatic leader. It's about being part of something historic. But the market doesn't care about history. It cares about cash flow. If you're an investor in your 20s or 30s, you have the advantage of time. You don't need to hit a home run with every single investment. You just need to avoid the strikeouts. Buying into a massive, overhyped IPO like SpaceX is a high-risk move that could set your financial progress back by years. Instead of chasing the shiny object, consider the power of compounding in boring, reliable assets. It might not be as exciting as a rocket launch, but it's a much more certain path to the American dream. We also need to discuss the regulatory environment. The SEC is watching SpaceX very closely. Any delay in the IPO, any investigation into their accounting practices, or any legal battle involving Elon Musk could send the valuation plummeting before you even have a chance to sell. When you invest in a company with this much key man risk, you're not just betting on the business. You're betting on the health, sanity, and legal standing of one individual. That's a lot of pressure on your portfolio. In the coming months, you're going to see a lot of experts on TV telling you that you'd be crazy to miss out on SpaceX. They'll show you beautiful animations of Mars colonies and talk about the trillion-dollar space economy. But ask yourself, who is paying these experts? Often, they work for the very banks that are underwriting the IPO. They have a vested interest in making sure the public buys as many shares as possible. Their job is to create the hype. Our job at the Wealth IQ is to cut through it. We want to empower you to make decisions based on logic, not FOMO, the fear of missing out. FOMO is the greatest enemy of the retail investor. It's what causes people to buy at the top and sell at the bottom. It's what makes the billionaires richer and the everyday person poorer. By understanding the IPO trap, you're already ahead of 90% of the market. You're learning to see the strings behind the puppet show. So, as we wrap up this investigation, take a deep breath. Look at your financial goals. Does a high-risk, speculative bet on a satellite internet company fit into your long-term plan? For most people, the answer is no. There are better, safer, and more reliable ways to grow your money. Stay disciplined, stay focused on the math, and most importantly, stay skeptical of anything that sounds too good to be true. Because in the world of high finance, if you can't spot the trap, you're probably already in it. Building wealth isn't about luck, and it's certainly not about following the crowd. It's about having the right information before everyone else does. At the Wealth IQ, we're committed to digging deeper, running the math, and uncovering the financial truths that the mainstream media ignores. If you found this investigation valuable, do two things right now. First, hit the subscribe button and turn on all notifications so you never miss a revelation. Second, leave a comment below and let us know your thoughts on today's topic. We read every single one. Your financial future is the most important project you'll ever work on. Let's build it together. I'm the Wealth IQ expert, and I'll see you in the next investigation.